Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 11th of October. Starting with the FTSE 100, which remains becalmed between 82 and 8300 roughly. We've got a support line there at 8200 and resistance line there from back in May 8360 and micro range now between the uptrend line from February and the 50-day line there, 8260. RSI below neutral 50 at 46, so downward biased, and also on that basis, and also the falling 50-day line, also hinting that the next move could be back below the 8200 level, but little sign of any meaningful movement there. Basically, all over, or since the early part of the summer. Moving on to the DAX, and here more normal situations, or more normal situation in the sense that we found support at and above old resistance, so above the 19,000 level, and above that looking for a retest of last month's peak towards 19,500. Best case is that we hit 20,100 by the end of this month while we're above 19,000. Worst case at the moment is a test of the 50-day line at 18,600, but the way things are looking with the RSI at 58 and good bounces above neutral 50, this looks like it's a market that is still pretty strong. The Dow is next, and here you can see that we are just hitting the top levels there towards 42,500. Top of the channel there as high as 43,400. Looking for that by the end of this month, while we remain above recent support 41,800. Worst case again the test of the 50-day line, but at the moment doesn't look like there'll be any rug pull to speak of. Bitcoin is next, and here it's been a struggle, and the parameters quite tight as well, in the sense that we've been basically between the 50-day moving average and 60,000 and the 200-day line there at 63,500. Not expecting much near-term movement, given the way that 60,000 is a big psychological number. If we do dip down, maybe down to 57,000 or so on the upside, still looking for that elusive break of the, or sustained break of the 200-day line to take us to the top of the range at 67,600. Gold is next to cheer us up, hopefully, in the sense that the rebound has happened basically at where we were expecting it. We were expecting a bounce, one of the places anyway, 2620, which was initial September resistance. That's come in a new support, and hopefully we can then head back towards the top of the channel there in 2700 over the next couple of weeks. RSI bounced off the neutral 50 level as well, which tends to be a leading indicator on the upside and continuation signal. So looking better at gold after a couple of weeks of retracement. Moving on to the stocks and starting off with Avacta, and here you can see that shares have behaved themselves just for a change. We were looking for an end of day close back above 52 pence. We got it yesterday, and obviously there's been a follow through there. The initial target here, the gap down that we had there at 64 pence, and then after that the 200-day line 65, just coming up to 66 pence. But key here is to have as many days as possible above 52 pence. In fact, yesterday the shares gapped up, which means that we've got a bear trap island reversal, so gapping down last month and then gapping up this month, which is actually one of the strongest signals around. Let's see if that technical setup doesn't jinx the situation. Moving on to ECR Minerals, where I interviewed Mike Whitlow during the week, and look at that. Obviously, the market very impressed with that interview. You can see that we're nearly up to the 0.32 level we were looking for, the top of the range at the top of that falling trend channel. We gapped up to start the week, so that's a bear trap gap reversal. Strong signal there. In fact, we also got the 50 and 200-day lines rising. That means we're about a week or two away from a golden cross, and that tends to be the strongest part of the cycle. So this does look as though an end-of-day close above 0.32 will take us back into the 0.4s. The best levels of the year, so ideally for ECR fans, this is the turning point, and there's no break back below the August resistance, neckline resistance there at 0.29. Maybe one has to allow down to the 200-day line at 0.28, but at the moment the setup looking good, providing obviously we don't just fail at the top of the range. Gunsynd is next, and this is also looking surprisingly encouraging. We've got the shares in what I call a V-shaped bull flag off the lows there, bear trap below 0.11, and all we're waiting for now is an end of day close above 0.16 and the top of that September gap to take us up to 0.24, maybe by the end of next month. Moving along to GreenX, which had a massive win, and the shares were up for a day, but in typical London stock market fashion, we came back down again. Now, I suppose the opportunities are rather better than before, because now we know that the company's won its big litigation, bounced off the 50-day line there, and left a bear trap island reversal, so gapping down in August and gapping up this month. So should be on its way. Early and end of day close back below the 50-day line and the top of that gap, delaying the prospect of a move back up to the low 50s, the top of that triangle there from back in April. Genedrive is next, and here also pleasing us with the Breakham neckline resistance there to around 2.3 pence. Above that, even though the shares are down today, looking for the 200-day line, 3.75 pence, hopefully sometime later this month. Interesting moves here at Mobile Tornado, where we're back in business for the bulls. We managed to basically test that gap as a gap fill rebound that we had last month, and the current view is at above the 50-day line and that broken July resistance line at 1.4 pence. We're looking for 2.2 pence by the end of this month. Mila is next, and here an improving situation as well. We've broken above the 200-day moving average at 0.6 pence. Haven't been above that, I think, for quite a while, basically for a year. We obviously tested that back in May, but above the 200-day line, change of trend, 0.6, and we're looking for up to 1.1 pence by the end of next month. RSI, sorry, the 50-day moving average already rising well, and obviously those candles this week looking very strong, so it looks as though something positive is going on there. On to Premier African, which is normally a bit of a death trap for bulls, but here we've got a little nice little setup in the sense that the shares gap down beginning of the month, the top of the gap there at basically where we are now. I want to see an end of day close above 0.365 to take us back up to the 50-day moving average at 0.05, but obviously the company rather addicted to fundraisers, so it's a bit turbulent. On to SkinBio, which had announced an acquisition today, top of the channel there from March as high as 15 pence. Looking for that by the end of next month, giving the shares a bit of time, especially off the back of the latest gap high that we've had today towards the 50-day moving average. Upside valid while we hold above the 200-day line and the floor of that channel from March at 10.75 pence. On to the last two. The first one also slightly obscure, TinyBuild. Here you can see that the shares have gapped up 2 days in a row after gapping down at the beginning of the month. So it's another bear trap island reversal. Obviously the market's rather quiet and slow, but the setup is still there, and looking for the shares to at least get up to 5 pence by the end of this month, providing there are no fresh lows below 3.25. Finishing on with VAS, which has had a decent bounce today. Here, shares recovering well after the rather draconian RNS that that company had to put out last month. We've exceeded our initial target there at 0.14, above 0.14. Filling the gap up to 0.16 and looking for actually up to the 200-day moving average at 0.3 pence by the end of next month. Punchy call there, but certainly if we can get above 0.2, we really are on our way in terms of recovery. That's it for me today. More updates over the weekend.